Hi there, Howard Friend, HF Systems. Little update on the major markets, technical perspective over the short term. Interesting day today in that the dollar crosses have had a go at the downtrend as expected, having based or topped out in dollar terms at levels I expected them to, but we've since seen a bit of a rejection today. So there could be something interesting going on there. I've adopted a neutral stance now on these dollar pairs, having been bearish for the last couple of weeks. Okay, starting with euro dollar. So we had this base at 106.42, which is what I was looking for, the old reaction high within the prior downtrend. So base there a couple of days ago and then broke through the swing high, 107.486. But we've since seen just a marginal new high today, 107.651, and we've rejected. We formed an upper shadow on the daily candlestick so far. Not closed yet, but looking pretty much like it's going to close well off session highs. Interesting how this is rejected from just nibbling above the falling 50-day moving average, the red line. So that could be a bit of a warning sign there for the buyers up at these levels. So a neutral stance is favored over the short term. I'll be looking on Monday and Tuesday for break above 107.651 to resume the uptrend, and that would bring into play a couple of projection targets that come in at 108.369, 108.728. Whereas, should we break through the 106.625, that's yesterday's low, that would put pressure on 106.421, the corrective low from a couple of days back, and then that would start to look very toppy. That would look like we are about to see a good retracement of this 103.497 advance. So should that happen, we don't know if it's going to yet, but should it happen, then I'd be looking for 105.907 and possibly 105.548 over subsequent sessions. Moving across to cable, sterling dollar, a similar kind of idea there, although cable was a little bit, I guess, ahead of the curve in that yesterday saw the break of the swing high, having based out where I wanted it to base out. So today we've extended the rally on the break of 126.011, the previous swing high, up to 126.669, but you can see again a bit of an upper shadow forming on today's candlestick so far. So that is warning of waning upside momentum on this leg of the 121.551 advance. So I've flipped from a bullish stance to a neutral stance. Looking for break above this 126.669, today's session high, to revive the rally next week for upside targets which come in at 127.474, 127.877, as we have a look at the falling 50-day moving average. But if this doesn't happen and we fall back through 125.518, yesterday's low, that would start to look a bit negative. And that would again put pressure on the reaction low, which comes in at 124.716. And then we're looking at lower levels for cable, 124.37 or so initially. Moving across to dollar yen. Now dollar yen, in line with the dollar finding a bit more support around current levels. Yesterday we saw the formation of a potentially bearish outside bar within the recent downtrend. It failed at 127.582. Broke through the previous session's low, but we saw a big bounce off of yesterday's session low, resulting in a nice lower shadow on the daily candle. Today, so far, we've had a go at the downside, but again, as with the other two dollar crosses pairs that we've just spoken about, we're seeing some buying coming in at these lower levels on the recent move. So this starts to concern me a little bit in terms of perhaps a basing idea. Certainly the decline is losing momentum. And a neutral stance over the short term is now favored. So I'm going to be looking for break below yesterday's outside bar low at 126.551. That would resume the downtrend, putting pressure on 126.362. And then again, we're talking about that 125.681 target mentioned yesterday. On the upside, should we break above 127.582, the top of the outside session's high, that for me would confirm a base, and it would look like we are headed higher for dollar yen. And that would bring targets 128.303, 128.664 into play. And then we've got the falling 20-day moving average, which comes in just a little bit above there at present. Moving on to gold, a similar kind of situation there, in that we saw a correction from 1869.73 to 1840.77. That based out above the level I was looking for, 1836.17. And today we've had a bit of a probe higher, but again, as with the dollar crosses, we are seeing a bit of a rejection. So we've rejected from 1861.96, and we're forming a bit of an upper shadow on today's candle. So that's, again, a little bit concerning from a bullish perspective. I was looking for this thing to break through the recent swing high, as did the other two dollar markets, cable and euro dollar, but gold has clearly not done that. So there's a bit of a warning there. So a neutral stance is favored for the time being. The bulls obviously need to break above today's session high, 1861.96, and that would suggest a resumption of the 1786.82 advance, as I was looking for yesterday, for a move up towards the 100-day moving average, which currently comes in around just below 1887. Should we fall back through 1840.77, that for me would confirm a top for gold and failure of the 1786.82 move. So then we would be looking for a retracement of that move, with projection targets coming in firstly at 1818.52 and then at firstly at 1825.94 and then at 1818.52. Moving on to crude oil. So crude oil did see the breach of 111.30, the swing high, the minor swing high, which I was looking for, and yesterday saw a very, very powerful bullish session. So that was really well within expectations and all good. We saw the break of 113.27, the recent major swing high. Today, a little bit of chop as we correct the yesterday's strong session. The bulls really are in control. I think as long as we are holding above 108.54, then looking for further headway up towards 115, and I've got a projection target which comes in at 117.043 to extend this bull run. If we lose 108.54, then that for me would suggest upside failure, rejection at these higher levels, and then I'd be looking for a retracement of the 103 advance, with the low 105s then likely as the move is retraced. Moving on to S&P 500, again, like crude, expecting quite a big move higher. And which we've certainly seen today, the second consecutive strong session, which followed the break above the previous recovery high, the swing high 398.515, which confirmed a big low failure, a trap below the May 12 swing low. That's what I've been looking for, and the market's played out very, very nicely. Today we've broken through a key level, 409810, the last reaction high within the old bear market or correction, whatever you want to call it. Certainly a bullish indication. We've broken through major resistance, so now we can be talking about potential double bottom pattern forming on a big picture, looking for big move higher. We've got falling moving averages coming above the market. The 50-day currently comes in at 4277. The 100 comes in at 4352. Obviously, they'll be nibbling lower as we go along. I would say that we're a little bit a little bit overextended on a near-term view. So it wouldn't surprise me to see some kind of corrective pullback maybe into Monday and Tuesday, just some minor correction. But I don't see too much on the downside now. I think momentum really is with the buyers. So from here, looking for dips to be shallow and limited to the low, maybe the mid 4,000s before we can see some more gains. On the downside, I think I'd need to see this thing back below 3985.15. That would really suggest upside failure. And another crack at 3875 and maybe 3810.75. But for the time being, that bearish scenario is not favored. Moving on, last one, Bitcoin. So Bitcoin, we've been stuck in this range around 30,000. Yesterday, we had a downside probe through the bottom of the range and a snapback. So that was potentially bullish, but today we're starting to see a little bit more weakness. So we've not seen a big snap forward, snap higher, as we've seen with crude oil and with S&P. So some real decoupling going on there with Bitcoin against the other couple of markets. So for me, the way this is developing now, there is a risk that we are forming lower highs and lower lows. So the bullish scenario that I had, the basing scenario, is under threat at this moment. So for the time being, I've gone neutral, looking really for either break above this 3188 to confirm the old basing scenario. Up we go. Pressure on 31,352, but failing that, it looks like we could well be nibbling lower, grinding lower, and then maybe having another crack at these lows. So again, kind of neutral short on a short-term basis, but very wary now that we are starting to form lower highs and lower lows on this chart. That's pretty much it for the week. The week has seen some pretty good good forecasts, I would say. If you've been watching the forecasts on a daily basis, you'll have hopefully you'll have been impressed by some of them. Please, let me know if you got any feedback on what we're doing, what I'm doing, the methodologies employed, where the targets come from, that kind of thing. Thanks very much, and more next week. Have a great weekend.